Townsville has increased by a massive 17% in a year, with median house price now over $500,000. But just because cheaper properties are gone, does that mean capital growth has gone too? This episode, we're taking an in-depth look into Townsville and answer 3 major questions. What's actually driving growth? Does it look set to continue? And most importantly, what signs can you track if you are looking in investing in Townsville? My name is Junge, the lead research analyst at InvestorKit. Let's get into the episode. So, is Townsville about to tank? First thing first, I want to show you Townsville's property market history over the past 20 years. A very interesting thing is, Townsville has gone through a full cycle over the past 20 years. It might seem a bit long, but it's a full cycle. From 2004 to 2008, Townsville's house prices surged by over 80% in just 4 years. So that was the expansion phase of its last growth cycle. And then from 2008 to 2010, that's the peak phase. House prices stayed at the peak for some years. And from 2011 to 2019, Townsville experienced a very long declining phase. From 2020 to 2022, we saw recovery in Townsville, but the growth was kind of slow at the time. And now into 2024, Townsville started to boom, I would say. And it seems that we are entering an expansion phase now. So because of the extended declining phase in the past decade, Townsville's last 10-year annualized growth was just 2.9%. And its last 20-year annualized growth, although it's a full cycle, it was only 4.5%. So both of these long-term growth rates were much lower than Australia's long-term average of 5 to 7%. So really, Townsville has just entered its new expansion phase with a lot of room ahead to grow. However, just because it has room to grow doesn't mean that will grow fast for the coming few years. If that's the truth, Darwin or Melbourne would be growing really strongly now. So what's making us believe that Townsville has the strength to grow strongly in the coming few years? Let me explain with some economic and property market indicators. Townsville's population declined from early 2010s all the way to 2021 to almost 0% growth each year. And then from 2021 on, we have seen a very strong recovery in it. And now the annual growth is around 1.3 to 1.4%. It is not really high if you compare to Australia's average, which is above 2%. But compared to its last decade average, that's actually the highest population growth we've ever seen. Same thing with internal migration. Over the past decade, Townsville was almost always losing its residents to other cities. But in 2021 to 2022, we started seeing positive net internal migration, meaning more people are moving into Townsville instead of moving out of Townsville. So this recovery in internal migration is also one of the contributors to its strong population growth now. And then the job market is becoming more active. Back in 2015, 2016, we saw close to 10% unemployment rate in Townsville. But ever since then, unemployment rate started to go down. And now, as of 2024, the unemployment rate is still below 4%. That is a really healthy and active job market. Then if we look at Townsville's GDP, or for a city GRP, gross regional product, we see a massive 4.8% GRP growth in the past financial year. And that is compared to Queensland's average 2.4%. So double Queensland's GDP growth rate. All these, population, internal migration, unemployment rate, and GRP growth, are pointing to a strengthening economy in Townsville. So that is the foundation of Townsville's strong property market growth. and one of the main drivers of the property market. Now, let's look at the other driver of Townsville's strong property price growth, that is the high market pressure. And we're going to look at both the sales market and the rental market. First, in the sales market, we are seeing low and declining days on market and low and declining inventory level. So days on market first. In 2023, as the interest rate kept hiking, days on market actually stopped declining for the whole year. And it actually increased a bit. But entering 2024, as the interest rates stabilized and buyers' confidence recovered, days on market in Townsville started to decline again, and we are now still seeing this strong momentum going down. And then on the supply and demand side, the number of for sale listings has been declining since 2021, 2024, and it reached a historic low level at the end of 2023 and has been hovering there for the whole 2024. And at the same time, sales volume is seeing a slight increasing trend. Combining these two together, we are seeing inventory to be going down ever since the early 2024. Now, at this really low level of 1.1 months of stock, it's really hard to continue going down, but it has slowed down a bit in recent months, but we are still seeing this downward trend. So now, in the rental market, first data point we want to look at is the vacancy rate. Vacancy rate now in Townsville is around 0.6%. It is slightly higher than last year. The same time last year, it was around 0.5%. But I wouldn't say it's a significant increase. Over 2024, I believe a lot of investors have entered Townsville, and that has made many people to think that rental supply is surging, the rental market is loosening up, and that's perhaps one of the reasons why people are thinking Townsville is about to tank. But in reality, if we look at the number, especially the vacancy rate, Townsville's rental market is still actually stable and continue to be very tight. And because of the tight rental market supply, rental prices have increased by 9% in a year. That's really high rental growth if we compare it with the long-term average, but it's not as high as its price growth. That is why rental yield in Townsville is declining now. 2 years ago, we might say 6+% rental yield in Townsville, but now it has dropped to 5.8%. But still good, don't get me wrong. 5.8% is still very good, very healthy rental yield. And something to remember about yield is that when I talk about 5.8%, I was talking about the current market yield, which is the ratio of your annual rental income and the current market price. However, if you are already a landlord in Townsville, like many of the InvestorKit clients, your yield on purchase would be now 7% or even 8% or higher. So now, the high market pressure in the sales market and the rental market has made us believe that Townsville still has the strength to grow robustly in the coming 1 to 3 years. Now, if you are interested in investing in Townsville and you're concerned whether it's about to tank, here are 3 metrics I would like to use to monitor the market, just so you can tell when Townsville is about to tank. So metric number 1 is the vacancy rate. Now Townsville's vacancy rate is quite stable, but one day in a few years, when you see vacancy rate surging up constantly, that might be a bad sign for the rental market growth, and it may eventually lead to the tank of the sales market. When I'm talking about surging vacancy rate, it's not just going up from a 0.6 to 0.8, but perhaps from under 1% to above 2%. And that would mean the rental supply on the market is too high, or the rental demand has decreased significantly. And metric number 2 is days on market. Now Townsville's days on market is still declining, but in a few years, one day you see days on market started to increase constantly, that could be a sign that the market is about to tank. One example is the New South Wales city of Coffs Harbour. Coffs Harbour's days on market at the lowest was 47 days, and that was in mid-2022. From there, it increased all the way to 110 days by the end of 2023. Since the days on market in Coffs Harbour started increasing, growth started to slow down. And by the end of 2022, early 2023, price growth has become negative. The third metric I would like you to monitor is the inventory level. If one day the inventory starts to go up constantly, that's a sign that the property boom in Townsville is about to slow down. And I have an example here, Mount Gambier in South Australia. Mount Gambier's inventory level was extremely low, also around 1 month of stock in 2022. And over 2023 and 2024, we were seeing a steady increase in the inventory level, and now it has reached around 3 months of stock. As the inventory level increased, the price growth was still happening. Actually, in 2023, Mount Gambier achieved really good capital growth, I believe at the highest, 18% in a year. But the increase in inventory is just a sign that the boom or the growth cycle has entered its second half. There's still a good amount of growth ahead, but you can just not expect the same extremely high growth rates in a year as it has happened previously. So to summarize it, Townsville is not about to tank now or anytime soon. In the short term, the high market pressure is going to push house prices there to continue growing in a fast pace. And in the medium term, one, there is plenty of room ahead for Townsville to grow because it has just entered its expansion phase of its current growth cycle. And two, the strengthened population growth and the local economy are going to continue underpinning the housing demand in Townsville and through the property market growth. So thank you for your time. If you have any questions about this episode, leave a comment below. Arjun and I will try our best to reply to every one of the comments. I'm Junge. I'll see you next week.